Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, May 9, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have a current and ongoing melt-up operation. Taking the market from a big picture perspective, she's not that far away from the all-time highs. She's above the trend line that we've been watching for a long time now. She's not that far from all-time high. She's above a weekly chart. Breakdown candle high on Thursday. Will she have a floater Friday, or is she coming back to close the week around or below the trend line and this breakdown candle high? We don't know the answer to that. That will be answered by Friday's close. I can tell you this, if she comes back to close back inside that breakdown candle high, 515.30, that would be an uber bearish situation. If she stays levitated, has a floater Friday, is above all the moving averages, is above the breakdown candle high, is above the trend line, then she's bullish until proven otherwise. Write that down, put it on a sticky note. That's been pretty consistent from the get-go. Anything above this breakdown candle high on a weekly close is the bullish case. From a big picture and bullish perspective, the next major thing on the chart from a daily chart perspective is another breakdown candle high up here in the vicinity of 223 and change. It's a give or take. They like to run a test in the vicinity of these breakdown candle highs. Sometimes they come up short, other times they spike them through. The high is, from an official standpoint, 523.87. We'll call it 523 to 524 and change, which is also a stone's throw away from the all-time high. The flip side, because we're the umpire calling balls and strikes, is once again 515.30 on weekly close, and it is tomorrow's close, and that does coincide with the trend line. 515.30, put it on a sticky note, we'll see what happens. There are a lot of ways to make money in the market, on the short side, on the long side, with stocks, with commodities, with ETFs. There's swing trades, there's day trades, there's long-term positional holds. There are a lot of ways to skin the cat. One way we use, in addition to day trading opportunities, that's what's found inside the numbers and in the live room, but we also have the lazy swing trader. Some traders just prefer multi-day, even a week or two type of hold situation on these trades. Well, guess what? The swing trades had another 2 exits today. These are profit exits. The first one we'll go over is American Tower AMT. You could see where we pretty much nailed the low, the recent low at 171.99. We took a second profit today at 187.10. Not that far off from high of day. Funny how that works. We were already in a risk-free, emotionless trade. The band plays on. Base hits put you in the Hall of Fame. We don't win every trade. We got some losers here and there. We lose 5% on a trade, 4%, 7%. We keep it to a minimum. If we're going to lose, we like to lose small and fast. We don't take big losses in the swing trade product, but we're going to lose. There's no way we could possibly win every single trade, but what I will tell you is we win a large majority of the trades. A lot of base hits, some doubles, a few triples. Every now and again, we hit a whopper for a home run. Base hits put you in the Hall of Fame. Whether you like it or not, believe it or not, they put you in the Hall of Fame. Second exit today, Hartford Financial. So this was another second profit target, which means it was already a risk-free, emotionless trade from where? From the low, 94.81. How do we do that? How does the automagical algo system pick off the low? How do it know? Well, guess what? First profit target was 98.58. Second profit target was 101.33. And the band plays on. These are designed to be base hits and doubles. A lot of them. Just as an example, here's the closed list. These are closed swing trades. So here's an example. Of course, you can pause the video. You can Study the information. Most of these are base hits. That's what they're designed to do. We don't win every trade. We do lose some, but you can get an idea. Here's Hartford right here. Exit today, second exit, 5% total. We had lows, 3.5%, 4%, 6, 8, 1, -5, 4. Some of these are played with options. So you see something like 4 or 5% gain, and the option might have returned traders 50% in a week, locking in a minimum of a base hit situation. What happened inside the numbers today? We had resistance numbers. There were some scalp shorts. There were some long trades in there. What I urge you to do is pause the video, read the notes, and go back to the chart to double check the work. Traders in the live room, post something under the video. Help a brother out, like I like to say. Are you learning something? Are you making money? Is it beneficial? Do you recommend other traders take a look at the live room? Is it worth your while? We'll focus in on a couple of things. We were looking for a buy down at 515.85. They didn't give it to us. We had a pivot of 517.20 in the spiders today. 517.20. Right of the vertical is today's activity. Here's a spider 5-minute chart. 517.20 is this horizontal trend line, and you can see what happened. They dipped below it just for a few minutes today. Once they got back above it, they never looked back. 517.20 was the pivot. Above the pivot, she's bullish. Below, she is not. That's the way a pivot works. If she was above the pivot, she would run to 518.15. That was one place. That was a short opportunity. You could see what happened. They did come there. They spiked it. They pulled back from it. They provided a scalp opportunity. They provided the minimum required base hit we're looking for from an inside the numbers and live room perspective. We did that in real time. And what we said was, hey, look, if they go back up, don't let the rest go bad on you. Take a base hit, move on. There's another short later. Pause the video. Read the notes, go back to the chart, and double check the work. We actually did have a zone of overhead resistance above 518.15. You'll see was 518.90, some unfinished business. So we had a zone. You could see this at 9:15 before the open, 518.15 to 518.90. They spiked it, but they came back inside of it. Once they got above, you could see a retest, a couple of other attempts at a retest. But once they stayed above that number, she was more bullish into the remaining part of the day. Still was resistance on the initial spike above. Pause the video, read the notes, go back to the chart to double check the work. It's all in here each and every day. Tapes like today that have very shallow pullbacks, very quiet, low participation, low volume, grinding type of situation for the most part. They're less of a trader's tape than a tape that has increased volatility, lots of volume, lots of participation, lots of excitement. Those are better trader type of tapes. Traders welcome volatility. They do not welcome a quiet, mundane tape. Pause them, read them, go back to the chart to double check them. It's all in here each and every day. 519.80, that was the next number above. If they were going to continue, you'll see it earlier in here. No change. The resistance zone now between 518.90 and 519.80. That's once they started getting above the first number, you create another zone. We already had a trade at the first number. You create another zone. And there was your 519.80. They spiked it. They pulled back a little bit. They hovered on it for probably a half hour, 45 minutes today, and then they closed above it, which is a positive for the bull case. Traders have to understand resistance numbers don't always mean a short. Sometimes it's just resistance on its face. A target doesn't always mean a short. Whether we take a short or not from an intraday perspective, a lot of other things go into that. What type of tape is it? What time of the day is it? Is it the lunchtime torture hour? Is it too late in the day to take a position? Meaning we don't want to hold something overnight, so why force ourselves to get into that type of decision if the trade goes against us even for a half an hour? We have to make a decision. Does that change the mindset? Does that change the mentality? All these things go into whether or not we take a trade. These are the things we discuss, we teach, we learn, we drill into each other in the live trading room. What we do in the live trading room more so than anything else is learn how and where to eliminate variable risk that we don't need. The more variable risk we can eliminate, the more probabilities we have the trade we're taking is going to work. How do you like dem apples? What's going on over in Camp IWM? Anything to discuss here? Anything different? Well, let's say they're above all the moving averages. The trend is your friend. The weekly chart, however, is in a different position than the SPY. Each chart is independent of one another. Here, they're challenging a weekly chart breakdown candle high, which happens to come in at 206.97. Can they close the week above, or will they close the week below that particular breakdown candle high? Each chart is independent of one another. Now, here's something else on the board, just from a common sense, logical market perspective. You have a gap up here that they have not filled. That makes it a piece of unfinished business. So the closing print here is 206.38. That's a gap. It was not filled the other day. They're back up here. They're above all the moving averages. What are the odds they do not fill the gap on Friday or thereafter? Pretty slim to none. Slim's on vacation. Do you think the gap is a final destination? Likely not, or they would have filled it a couple of days ago. What's above the gap? Breakdown candle high, all the way up here above 208. This is just food for thought, how I approach, how I read, how I look at the charts and the market. You don't have to. It's an idea. What you need to do is pick out the stuff that I teach. I tell this to the live room all the time. Pick out the stuff that I'm telling you, that I teach, that we discuss, and then you pick out the piece parts that make you comfortable, things you're comfortable doing from a trading perspective. Some traders like the long trade. Some traders like every trade. Some traders like the short trades more. Some traders like stocks on the move. Some traders only like the stocks in the Qs and the SPY and the IWM. We've got something for everybody. But everything is not for everybody. What about the folks down at the transportation department? Yesterday, we discussed the fact that they were hovering on, couldn't yet get through the 200 period moving average. Where are they today after building energy under the 200? Now they're headed to the 50 period moving average above and may beyond. Go over to the weekly chart and we notice a breakdown candle high coinciding with a 20 period moving average. This area up here around 15,650 to 15,700 will be overhead resistance. Doesn't mean they can't get through. Doesn't mean they won't get through. Generally speaking, they're going to have a bull-bear battle at that place, at least for intraday perspective, if not several days. Write this one down, 15,350, somewhat of a line-ish in the sand on the downside. Start getting below, closing intraday below, meaning hourly, 2-hour candles below, daily below that price, and it's likely the upside is finished and the trapdoor is re-emerging on the downside. What about the Q people? This one's interesting. So they're eating time off the clock, above all the moving averages on the daily chart. Eating time off the clock for about 4 days. Building energy to do what? Get through something. What is it? Again, each chart independent of one another. This is the breakdown candle high on the Qs. Comes in at 442.15. They're hovering just under it. Are they poised? Are they building energy? Are they coiled up to run through that place? Akin to the spider breakdown candle high that they're already well above, they're just now approaching the same corresponding place in the Q market. Not that far from all-time highs. We're just analyzing the stuff at the charts independent of other stuff. All be told, they're not far from the all-time high, period. Are we going to see some kind of a rug pull, trap door, trick, trap, fool, and frustrate crew situation? Do we have a phony jobs number on Friday, some other economic data point that could jolt the market? Anything's possible. We're just taking the market at face value. We'll find out tomorrow what tomorrow brings. What about the financials, the XLF? When the XLF, the financial sector, the financial complex, when they're on the rise and there's nothing wrong technically with the financials, is there anything wrong with the overall makeup, the overall complexity of the market? Is there anything wrong with the technical structure of the market from a bull-bear case perspective? The answer is no. The financials are on the rise. There's nothing wrong with the tape. Trend is your friend on all accounts, all time frames. What about Smashmouth? Pretty much the lone ranger in terms of being down today, a little more than 0.5%. Again, similar to the Qs. They're eating time off the clock on the daily chart for about 4 days. Well, you go over to the weekly chart and you say, well, what are they doing? Yeah, they're eating time off the clock. Right underneath, it's weekly chart, breakdown candle high, very similar / same as the QQQ people. What are they going to do on the weekly close? We'll find out at the end of the week, Friday close. It's like a photo finish. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.